Welcome, everybody. I am Eric Fellows. I'm the president of the Tennessee Mortgage Bankers Association. Don't throw anything at me. I'm good. So welcome, everybody. I've got, this is part of our Tennessee Mortgage Bankers educational series, and I want to introduce Angel Oak and Larry Mize. Angel Oak is one of our sponsors for Tennessee Mortgage Bankers Association. We call that sponsorship program Advocates of TNBA. So I want to thank Larry and Angel Oak for being sponsors and advocates for Tennessee Mortgage Banker Association in order to provide resources for you guys throughout the year. So, and one of the things that we do is this educational series. So this series is all about non-QM, which is obviously something very vital to our mortgage industry and growing consistently. So, and Larry's going to talk about what that opportunity is for you guys. And I'm thrilled to have him on the call with us and letting you guys learn and be able to grow your business throughout the next quarter and also into 2022. So without further ado, Mr. Larry Mize, you got it.
Thanks, Eric. I appreciate it. We appreciate being a part of the MBA as well. And I'm glad to have this opportunity to just educate everybody about a little bit of non-QM business and how they can grow their business. So with that, I'm just going to kind of lead into just a presentation here. And as you can see, we're going to have a few things that we're going to be covering. Let me just get rid of those here. There we go. And this will be a presentation. We're going to do a series of questions and answers. If you have any questions, still put those in the information, and so be cognizant about any questions that you may have. I mean, we're here to answer those questions for you. So with that being said, I'm just going to go ahead and get started. What we learned today, and really this is an introduction of what does non-QM mean today exactly, what you need to do and what you need to know about non-QM, how you can get more non-QM loans, where you can find the borrowers, and then how to differentiate yourself. And we're gonna kind of go through each one of these as we kind of talk about this. So the first question is really, who is Angel Oak? Angel Oak is a vertically integrated company. So what that means is we hold everything in house. And when I say we hold everything else in house, we actually originate from the bottom up. And we do our own securitizations, and we are the largest originator in non-QM since 2019. So we've been the market leader since 2013. We started this about 8 years ago, and we've seen the growth of this business just explode in the last few years. A few things that you can know and need to know about Angel Oak is customer service comes first. We actually let you talk directly to the underwriters if you have any questions. So we're very customer service driven. Like I said, you have access to underwriters. We have a common sense approach. So if the deal makes sense, we try to go outside the box and try to help any borrowers that if it does make sense. We help originators differentiate themselves. So we'll talk about that a little bit later of how we can set yourself apart from offering these type of loans. We have an intuitive and simple website, which we'll kind of cover briefly towards the end of this presentation. And you guys definitely need to check that out. And then typically we have local representation. And if you don't have local representation, we do have inside sales. And basically the local representation is there to help you structure these loans and make sure that you have somebody to help you get these loans closed for you. So a lot of this may be new to a lot of people out there. And so for us, we really try to hone in and try to be helpful in hand holding as much as possible to get these loans close to the finish line and get a homeowner happy. So as far as who is Angel Oak, we're non-bank private capital origination since 2017. So we're the largest non-bank originator. It's awesome. So what is alternative lending and what does it mean today? So the advantages of non-QM features versus a QM. So what's really the difference and what are the advantages? Non-QM satisfies the ability to repay like a QM loan. So they're very similar in the way that they are processed. Non-QMs have loan terms that exceed 30 years or interest-only loans. And of course, QM loans cannot. non-QM caps on fees and points where we're maxed at 5% on a non-QM, you're maxed at 3% on a QM mortgage. Standard DTI on primary and second homes is 40-50 for us. QM can vary, obviously. So our DTI is 40-50 on primary and second homes. Non-QM for self-employed borrowers can qualify off bank statements versus tax returns. And we'll dive into a little what that looks like a little bit more, but QM borrowers obviously cannot. Non-QM doesn't have a limit on number of non-owner properties financed. Okay. Non-QM allows non-owner properties to close in an LLC, where QM does not. So again, non-QM must also adhere to the ability to repay. So we do. And then just want to talk about, the difference between non-QM from pre-crisis and subprime, because there's the old subprime, and then we've implemented Dodd-Frank and the ability to repay. So here's a few differences: pre-crisis subprime and non-QM. Obviously, there was really no regulation on subprime. We allowed stated loans and no documentation. Appraisals, they were misaligned. And then the credit scores, of course, 620, 83%, and 40% DTI. That was the average of those type of programs subprime. Now non-QM, we have to adhere to the ability to repay, income verification, full documentation. Of course, the appraisals are all going through AMCs now, and they're fully independent. But right now, our average non-QM loan is an average score of 740 and 75% LTV and a 33% DTI. So we're almost 120 points higher, and about 8% lower on LTV and about 7% lower on DTI. So that's a lot of the difference between pre-crisis and post. So, which is great, obviously. What's the potential for alternative living? So historically, 10% of the mortgages in the market consisted of activity that fell outside of agency and prime jumbo space and private capital. So, of course, so some of that private capital that's out there, we have seen the average when good loans were being made, that was about 10% of the market share. So non-QM products help borrowers who can't afford a QM loan. So what does that look like? So, of course, we have a bank statement program, and that's for personal or business. And what that does is that helps self-employed borrowers qualify based income off the cash flow of their bank statements versus looking at their tax returns or their W-2s alone. So it may not be relative to their ability to pay. We also have a debt service cover ratio. It helps borrower qualifies based on rental analysis to determine the cash flow versus using income and debts. Then we have some just missed products, and we'll talk a little bit about those, but typically things that don't meet your seasoning requirements for your BK short sale or foreclosure. So we help well-qualified borrowers that maybe fall outside that agency box, where we may shorten that time for you guys. And again, some people have a life or credit event, which this helps a borrower that's been affected for that a credit event. Like I said, the bankruptcy, foreclosure, short sale, loss of job, and things like that, recent mortgage late. So those are the things that we can kind of help. And then, of course, no income, high assets. This is basically allows borrowers to qualify for loans using their liquid assets and does not require employment or debt to income to justify the ability to repay. So it's for borrowers who have enough assets to buy the home outright, but don't want to liquidate their assets to do so. Angel Oak's average in non-QM today. So as you can see, I mean, bank payment products is probably about 60 or 70% of our business right now. And as you can see, our average FICO is 744, average LTV 76. Investor cash flow, which is that DSCR product, average FICO is 760, and average LTV is actually 65%. And then the just miss prime is average 735 and 80%. And again, bank statement programs are for self-employed borrowers, been self-employed for 2 years. They qualify as the income off the deposits. investor cash flow, again, is designed for real estate investors who is experienced in purchasing and renting management properties, and basically the qualifier for that product is based off the rent analysis. And then, of course, we talked about the Just Mints product, designed for mortgagers with clean credit, but who potentially seek a loan amount that exceeds Fannie Mae loan limits, or well-positioned generate volume given banks curtailed lending. Why should you care about non-QM? Well, one reason is because it's one of the fastest growing segments in the mortgage industry. A lot of people had a great year in coming off the refi boom. And so for us, we're seeing this growth come before the refi boom, and it's just starting to soar now. So why would we need to originate non-QM loans? Be the standout resource, differentiate yourself, to your realtors, to your borrowers. Do these loans before your competitors learn how to do it. So that's why you're here. You want to know more about this product, and that's what we really want to do. Is we want to really bridge the gap between the hard money that's out there and what you are offering today, which is that traditional agency product. Increase your earnings. Obviously, you save these fallout. We see a lot of fallout from agency loans. And so what we'll do is you'll be able to save these loans where they're getting turned down today. You may be able to help that borrower out. And then, of course, you can have residual income. Some of these loans are just a temporary patch until they can get that traditional financing. So, and when you're saving these loans and you're helping these borrowers, you're strengthening your relationships for your referral partners. They're going to count on you to be able to do every loan and not just certain loans. And then, of course, investors with us, of course, we allow loans to close in the LLC, and we have no limit on property. So you can really help out those investors out there. And then, of course, if you're not offering this product, I mean, you're going to lose possibly a loss of a referral partner from friends and families, your relationships that you have with your realtors. If you're not doing these loans or offering these type of products, they're going to find somebody that is going to offer these products and close these loans, because these loans are out there right now. And of course, you're going to lose immediate earnings if you're not providing non-QM options. And then, of course, if you had your client, this borrower could be yours for life. But if you're not offering these products, then you're not going to be able to help everyone, and you could lose some clients of that. And so, of course, the huge potential for closing loans right now. I mean, the investors, a lot of you guys are seeing investors out there. Of course, there's a lot of purchase out there, but self-employment is 36% of our workforce. That's 59 million U.S. workers considered self-employed. So this bank statement program is huge for us. And then, of course, adverse credit events, we kind of talked about that. And then there's 5 million people plus that's had a foreclosure since 2014. And what we do is we offer 1 year out of foreclosure on some of these products. And it's really looking for somebody that maybe had a life event and they've overcome that. So then, of course, the number of bankruptcy filings is over 5 million since 2014. We do allow shorter terms on bankruptcies. So get ahead of the looming end of your refinance boom. Obviously, the refinance boom is huge, but the projection is gone down, and what the refinance volume is almost cut in half from 2020 to 2021. As you can see, 2.1 trillion down to 1.2 trillion. So you want to be able to use these products to fill those gaps where you're losing some of that business. There's supposed to be a 24% increase in rates. So as rates start to trickle up, you're going to see a slowdown in all this refinance like you've probably already seen right now. How can we help you close more loans? Of course, the underserved markets, the potential borrowers that are out there, self-employed, jumbo borrowers, again, credit issues, life events, asset qualification, and investment programs. I'm going to cover a few things on our bank statement program. And as you can see, we go up to 90% at a 700 score, or 85 at 660, 70% down to a 600 score, and second homes up to 85%. You only need 2 years out or deed in lieu, loans up to 3 million. And then, of course, you do have to be self-employed or a 1099 employee. Typically, we have to have at least 50% business owner, but for our business bank statement program, but we can go down to 25% on personal. We do allow 12 or 24-month statements, and of course, no tax returns are required. All of these products that we offer are on a 30-year fixed, and so we don't even offer ARM products. And we do allow non-mortgable condos on all of our programs, as you can see. Again, the bank statement program is about 60–70% of our business, and then this investor cash flow is basically increasing its percentage every day. Everybody's trying to go out and buy investment properties right now. And then with the squeeze of Fannie and Freddie with that 7% cap, we're seeing an influx on this product as well. We can go up to 80% LTV on purchase rate and term, 75% on cash out, and scores down to 600. Again, no employment listed on the 1003 because we're not using personal income or debts or calculating the DTI off this. The qualification is strictly based off the debt service coverage ratio. And of course, the way you figure that out is rent divided into the PITI, and of course, make sure your homeowners association is included in that. No limit on the number of properties that can be financed. You must own a primary residence or has a history of being a current landlord. If you have somebody this is their first one, we'll take a look at those also. So you don't have to necessarily have a lot of landlord experience. So if you do have one of those, please reach out and let us know. And again, loans titled can be titled in an LLC. And this is on all of our investment programs. We briefly covered the asset qualifier. Again, this is up to 75%. And this is typically a program that is where they have the money to be able to buy the house and be able to afford their payments for about 5 years after that. So it's a great product for someone that's very liquid. The Platinum Jumbo is basically a just missed product for your BK and short sale foreclosure. We can actually go up to 95% on this with no MI, and this is a purchase or delayed financing. 80% on the cash out, second home's up to 85 and scores down to 660. Like I said, 4 years out on that BK short sale and deed in lieu right there. So that's a lot less seasoning than your typical jumbo that requires 7 years or no seasoning on those. And then we do offer a 1-year tax return program. So on this product, we do offer that 1-year tax return program. Portfolio Select, again, this is a just missed product for your conventional or Fannie Mae. And the difference here is we can go down to 600, up to 95%, or excuse me, up to 90%. And then only 1 year out on that foreclosure short sale or deed in lieu, and then 24 months out on the BK. We do allow this on purchase rate and term and refi. So, this is our newest product that we just rolled out. So Foreign National, this is a pretty slick product, and it's basically going to be put on our investor cash flow, our DSCR product. And Foreign National is someone that lives and works and resides out of the country. So if you have someone that's looking to invest or buy a property here, we see it in some of the sand states, maybe Florida, California, just around the country where you're seeing a lot of investment properties start to be purchased. Of course, foreign nationals, you don't need any credit score. So you don't need any type of credit. It does have to meet the 1% DSCR. And what that means is if your payment's $1,000, you have to get a rent analysis that covers that $1,000 if the PITI is at that. We do ask for 12 months reserves in a U.S. account. And then, of course, the assets need to be sourced for 60 days, and it needs to be in a U.S. account for 30. We are requiring that an ACH is required for the monthly mortgage payment out of that account with where the 12 months reserves are, okay? We do offer Prime Jumbo, and this is your true Prime Jumbo, 90% LTV, 660 score, 7 years out on the BK short sale and foreclosure. This is your probably your lowest rate on your jumbo products that we offer. So how technology advancement is making non-QM easier. Just want to kind of touch on some of this, and we are very technology driven here at Angel Oak. We have a pricing tool. I can show you an example here, but yeah, you go directly to our website, and it's angeloakms.com/quick quote, and you can put in your scenario. And as you can see, there's only about 8 drop down boxes right here. And then once you do that, it qualifies you in a couple seconds. So try to use a quick quote when you get a chance. Run your scenario and they'll price it out immediately, which I actually do this from my phone a lot. So if you're out at a realtor presentation or you're talking to somebody and they ask you about a bank statement program, you can go directly to our website and get that priced out immediately from your phone and give somebody a LTV and a ballpark on a rate, which is pretty handy. So again, the pricing tool, which is our quick qual. And so the quick qual, you actually, once you put your scenario in, you go in and you upload your 3.4. It's okay if you don't have your 3.4, you can just click next and go upload a 1003. And then we'll get you to upload a 1003 in credit so that we can evaluate these loans. We actually pre-underwrite these loans before you get an approval, and Angel Oak AEs approve every one of your loans before you go out shopping for a home or anything like that. So we actually pre-qual these loans. So this is where you go to our system, go upload your 1003 in credit, and then from there it goes over to our AE and they review it. If it's a bank statement loan, we actually have a bank statement review team that calculates that income for you. So no need in you putting a spreadsheet together and trying to figure out what the deposits look like or anything like that. We take all that heavy lifting off of you and help you calculate that income. And that income that we actually calculate is what's going to be used in underwriting. So it's really nice to have that pre-qualification before your borrower is going out shopping for a home. Of course, we review the statements, we analyze the deposits, we calculate the income. And of course, this is where the technology comes in. So it's a lot more streamlined. So your borrower can get to the closing table a lot more quickly. So, and we're typically giving you those back within 24 hours, those calculations on those works. Of course, the benefits to you, the LO, the income is established and approved at the time of pre-qual. Diminishes the closing delays or any potential closing, and save time, like I said, by not having to review statements on your own. We're doing that heavy lifting for you. And then, of course, the target borrower. This program is focused for business owners or 1099 employees whose tax returns may not be reflective for their ability to repay. And I am seeing a lot of these self-employed borrowers where they may qualify for a $300,000 or $400,000 home, but their bank statements can help them qualify for double that. So a lot of times, if your borrower is not happy with what they can actually qualify for, this is a great alternative for them to look at. And then we have a chat feature on top of our website. So anytime that you have issues or questions or anything like that, you're so welcome to chat and get your answers immediately. So that is a great feature that we do offer. As you can see, it's just a little chat button, and then you go in and put your name in, your email, but it's just accessible on our website within our portal. There's a response in minutes, and this is an actual live group of bodies that are responding to you. And so it's not a chat bot, so that's all nice to know. Our TPO portal, which is on our website, that's where you're going to go and upload all your information for your loan to be submitted to us. We also have marketing tools and things like that. We also have a closing schedule, which you get usually those at the end of your CD. So a question that we get asked a lot: where can you find more non-QM borrowers? Let your referral partners know you can access these type of loans, and that they'll kind of do the work for you. Your realtors, other LOs, large banks, credit unions. There may be banks out there that are not doing non-QM business, so those are great referral partners. CPAs, tax preparers, financial planners and wealth advisors, attorneys. Again, like I said, business bankers, builders and developers, hard money lenders, which is a great resource, especially for the ICF product or the investor cash flow, our DSCR program. Lead providers, of course, appraisers, and things like that. So this is just a testimony from, one of our clients, just letting us know that how we really helped them in this experience and getting these loans closed. So typically when you close these loans, you have a lot of people that are very thankful for helping them and getting them to the closing table. So We help you guys with marketing. We have marketing flyers. We have whiteboard videos. Those whiteboard videos right there are 60-second videos that you can post on your social media, and it's not tailored to Angel Oak. It doesn't say anything about Angel Oak. It's just a 60-second video to give a scenario of maybe a self-employed borrower that needed to qualify for a home that got turned down. We offer realtor presentations. Like I said, we have flyers that we can offer. You put your name, your logo, all your contact information on the flyers, and you're marketing our products with your name to your realtors. And that's another way to drum up business. With realtor presentations, we would love to help you guys get some of those scheduled. So if you want, please feel free to reach out to me at any time, and I can help get some of those scheduled, and we can have an AE go out and be your preferred lender out there. And you don't have to tell them that we work for Angel Oak, we work for you, but we would love to come and talk to some of your realtors, maybe have a lunch and learn and do a presentation to talk about these products. When you walk away from those realtor presentations, you're typically getting, at least 1 or 2 loans out of the transaction. So it always helps to have and offer these realtor presentations. So we will support you if we can. Again, differentiate yourself. The key characteristics in choosing a non-QM lender, customer centric. Like I said, we're very customer oriented. We answer our phones. We respond quickly. We try to get loans closed as quick as possible. Typically, we can close a loan in 15 to 20 business days and 30 calendar days. So we're very efficient in that. You're working with non-agency specialists. This is typically 99% of our business that comes through the door is non-QM. So it's nice to have somebody that only offers non-QM. So that's typically what we focus on. Years of experience. I'm not going to go into the years of experience of how much everybody has at our company, but there's hundreds of years of experience in non-QM and subprime and just the mortgage industry itself. Easy to work with. And of course, like I said, we do make exceptions a lot. So if you see someone that maybe needs 90% and they have a 698 score, but they have they need a 700, we make score exceptions, LTV exceptions. Again, we make common sense loans. Again, we offer abundant resources. So for you to grow your business, that's really what we're looking to help you do, is grow your business and offer these products and keep it in your arsenal to be able to have these. So right now, I'm just going to kind of see if there's any question and answers.
I don't see any questions there in the chat box. And I guess if you guys do have some questions, just reach out.
Go out there and get that non-QM business and let us be your lender of choice. So we appreciate it. Be a part of the MBA and appreciate this opportunity again, Eric. Okay.
All right. Yep. Thanks, Larry. Thanks everybody for joining, and we'll send it out. If people wanted to watch the recording of it, we'll send it out through TNBA. It'll come from me through the Tennessee Mortgage Bankers Association. So again, thanks, Larry, for being a sponsor and an advocate of Tennessee Mortgage Bankers Association. And you guys have a great rest of the day. Thanks, everybody.